Let's talk to Craig Erlams. He's a Senior Market Analyst at OANDA. Good morning to you, young Craig.
Good morning.
Right, currencies today. We've got three slides. Let's kick off with the euro against the Japanese yen. Why on earth did you pick this currency pair to cover this morning?
I mean, for quite a long time, it's been consolidating. So you saw from September onwards, we were stuck in this quite tight channel around 130, 150, 130, 450. For a long time, it looked as though it was going to break lower. We were really testing the bottom of that cloud formation. That would send it into bearish territory. So quite a negative signal. We were getting that series of lower highs. And then towards the end of last year, we started to see some real strong support for the euro. We saw it break to a new high and then followed that with a breakthrough this trading range. So it started to look quite bullish. We've had a bit of a correction. The yen moves last week coinciding with the Bank of Japan purchasing slightly less bonds earlier this month, and people saw that as a sign that they may be tightening. So we saw some strong yen moves towards the end of last week. But we look at the charts right now and you see that the markets now aren't overly too fussed about that. We came back towards that 55.89 moving average. We came back to the Ichimoku cloud around 133, and then we've rebounded higher. It'll be interesting to see if we can make new highs. If we can, that's a very bullish confirmation signal once again. And right now, you look at the trading over the last 48 hours or so, and it's consolidation after a nice little uplift. So for me, this is still looking bullish. I want to see confirmation for a new high. But right now, the technical signals are looking quite positive.
It's quite interesting on the Ichimoku charts. They only work in trending markets. And you wouldn't really say this is trending, and yet they've actually worked really, really well as support and resistance. Oh, sorry, support below the market.
Yeah, absolutely. I mean, I guess we've got to look at the broader trend here. So if you look at a dollar-yen chart, for example, for a year, we've been consolidating. Yeah. We've chopped back and forth through the Ichimoku cloud, still giving some signals along the way to range highs and lows. But in this case, this was consolidation as we approached the Ichimoku cloud. So rather than dip down and test it, we kind of just sideways traded, testing it on numerous occasions. But the fact that it held on each and every occasion has to be a signal, really, you'd think, that the market remains bullish and isn't even considering a correction, because this would have been a good correction opportunity. Prior to this, we had quite a strong move, so that would have been quite a good correction opportunity. Market's not interested.
A good chart. Let's move on to the second one, the Great British Pound against the CAD. What's going on here?
Yeah, still early doors. Potentially some bearish signals coming. We had a nice little upturn here in pound CAD with pound, obviously. We saw some nice positive moves against a number of different currencies. We had these trend lines which we broke through quite comfortably after a couple of tests. We came back and we tested this real nice support zone around 168, 200, 233-day simple moving averages, the 89 simple moving average as well. So this culmination of moving averages clearly just provided a bit of short-term support, maybe some initial profit taking. But now we've come back and we've got the break of the trend lines. We want to see, is there a confirmation that this is a bearish move, or have we already seen the full extent of this correction? So you look at the fib here, we've got the 55 and 89 moving averages on there. So around 172, 171.50 is going to be an interesting test. We've held up at this point. We haven't seen that rotation lower yet. So I think there could be potential for this to be a bit of a sharper correction, even if this is still a bearish trend. So I've added the 678.6 fib on there. Not a usual favourite of mine, but when you've had a nice uptrend and you've seen that first test following the break of a trend line, sometimes the corrections can be a bit steeper than you would otherwise see. So I'll be very keen to see how we trade around the 173s if 172 is broken. But even then, I'm not convinced. But if we see a nice rotation lower off one of them, then this could potentially be a nice bearish signal into 168, and then that becomes key once again.
Understood. Let's move on to cable, the Great British Pound against the US dollar. It's obviously been quite an aggressive move up. We've seen the hedges talk about going long into this currency pair this year. We've seen the likes of Nomura calling up to 148 year ends. What are your thoughts on the technicals?
I mean, I think there's two factors at play. One, you've got the pound, which is doing very well. The further we go into discussions and the further we get through the negotiations and see a deal at the end of the tunnel, then that's got to be positive for the pound. And when you're looking at it against the dollar weakness story since towards the back end of last year has been quite considerable. We've seen a lot of downside for the greenback for a number of reasons. But now we're seeing the pound trading at levels that we haven't seen since the day after the Brexit vote. This is June 24th. We saw it move from those close to 160s back through to below where we're trading now. So now it's hard to look at support and resistance typically. But I think you've got the 138.85 where we've run into temporary support. That was the pre-Brexit low. The pre-referendum low. 140 is the one that interests me more though, because leading into Brexit we did hit 138.50, but on about 4 or 5 occasions we came to 140 and that's where we stopped. So that's the one I think that's going to be the line in the sand for the markets. It's a big psychological level, nice round number. Markets, for some reason, do pay attention to that.
Yep.
It doesn't matter why. The fact that they do is all that's relevant. So I'm looking at this. I'm keeping an eye on the momentum indicators. At the moment, there's no divergence. So I think 140 is plausible. And then I'll be keeping a very close eye on these to see if there's any sign that we're going to see a correction off there, because ultimately, that's a big old move off of in a 6-month period.
It was extraordinary this time last year. People were talking about parity, weren't they?
Exactly.
Craig, as always, thank you very much indeed for your time.
Thank you.